Hey guys, Hades here. So I just finished making a video on exactly like what the hell is going on in the market right now. Bitcoin just broke 88K, a really, really big psychological level. Trump's tariffs are still spooking the market. The S&P is looking like shit. Nasdaq's looking awful. Gold's rocketing. Like, what exactly is going on? And what does this mean for crypto? And what does this mean for your coins? So if that's something that you want a bit more clarity on and you want to know like exactly what's going in the macro side of things, I just finished covering it really detailed. So stay tuned and let's get into it. Okay, so Trump's tariffs. Now, okay, we all know Trump's been using tariffs, and he even said this before he got into office. He said that he loves tariffs. There's a lot of reasons why he loves them, but for us, and like what actually matters for us, is that he's trying to corner the Federal Reserve. Now, I'm going to keep this very simple because I don't want to use any jargon, right? Very, very simple. He wants to increase the liquidity. He wants to increase the liquidity into the market so that risk on assets go up. So like the stock market goes up so that he looks better in the midterm. Okay, that's one of the main reasons why he's implementing tariffs. Because it's messing up the economy right now, the US economy. So the Federal Reserve are going to be forced to do something. And this means potentially cutting rates and quantitative easing. Okay. But like I said, it came at a cost, right? So global trade got wrecked, panic selling in markets, and stocks have dumped. The dollar's nuked, yields have spiked, and it basically means that it's not looking good right now in the US. As we can see, the S&P 500 just nuked. This is on the weekly. I think I should have specified that. It's on the weekly, so you can see since just after February, just like straight down. Had a bit of a recovery, but then it's still not looking good. It's not pretty. The DXY, if you guys don't know what this is the US dollar index. And this is basically like shows us the strength of the US dollar. And it's nuked. As you can see, it's just broken support. So it looks really bad. Support was at around 100 and it's at like 98. Not good. And then this is a little bit more of a complicated chart. I'm going to go through this in detail a bit later. But you can see this downward movement here. The US bonds, they nuked a bit too. So yeah, the setup is it's looking nasty in the US economy right now. Okay. So what's going on? Well, everything's looking like shit. But gold is performing exceptionally well. Like, I don't know if you guys know this, but look at gold on the weekly. Since 2024, it's been up only. Up only. And recently, since the tariffs, so this is just after 2025, it'll be here, it's in a massive bull market. Why is this happening? Well, people are very worried about the US economy, so they gravitate to safe havens. They want to buy things that are going to keep going up in value, especially with inflation pressures. They're like worried about inflation and worried about risk on assets. So they'll sell their risk on assets, which is like the tech stocks, and then they'll buy gold. That's the kind of narrative here. Now, it's really funny. Bitcoin is kind of like in the middle of both right now because Bitcoin traditionally has been a risk on asset. So it's been correlated to the NASDAQ, the S&P, these kind of things. But it's starting to decouple. And you guys have probably heard a few people on Twitter talk about this, but I'm going to like say it really simply. Look at the NASDAQ. These are the tech stocks nuked. All of these are the same time frame, by the way. They're on the weekly time frame. So NASDAQ is nuked. You can see like a big nuke here. A little bit of a recovery, but it's not convincing. Like this is broken market structure. It's completely nuked. Not to say it could recover. Of course, it could recover, and I think it actually does with AI coming in and the increase in productivity that we're going to see in the economy over the next few years. But it's nuked. Then look at Bitcoin, bro. Look at Bitcoin. Perfectly intact. Market structure is beautiful. The support is down here. And it just about tagged it, and it just broke a really, really fundamental level here, 88. It's looking very good. So we're starting to see Bitcoin actually act like digital gold, which is a narrative that we've heard for a long time, but we've never actually seen it start to act like this in the market. And you got to remember, it's starting to act like this in the market because the big boys are starting to believe that. Okay. So this is what I wrote here. This is exactly how a major bull run starts. Narrative plus behavior alignment equals capital rotation. So people are rotating their money into safe havens, and Bitcoin more and more is seen as that. So right now it's a little bit weird. Bitcoin is seen as like a quasi asset. It's like a risk on asset and a safe haven more and more. So it's weird, but it's good for us right now. Okay. Mr. Powell. Now, if you guys haven't read the book is called this book. This book is amazing. If you guys, and Luke Belmar recommends this, by the way, if you guys have not read this book, you have to read it if you're interested in macroeconomy, because this is what we're going through right now. It basically outlines like the back end of the Federal Reserve and exactly like how they make decisions and the history behind it. Here he is. You guys should definitely read it because it's really really good, and it'll give you like a lot more understanding about what's going on here. But that's besides the point. The US economy is close to being in trouble. In my opinion, it is in trouble right now. Okay, liquidity is drying up. They're under a lot of pressure due to tariffs. Powell, who's the head of the Federal Reserve, he's got his back against the wall right now. Basically, it's a load of old men who've all got PhDs in economics. They sit around a big table and they discuss what the US economy is doing right now, and they discuss whether they should change policy. Now, one of the biggest policy changes that they could do is start quantitative easing. Quantitative easing is basically introducing new liquidity into the market that would go into risk on assets. So like new liquidity, and then this liquidity typically goes into risk on assets. Okay, so that's what Trump is hoping. And if this actually happened, we could see risk on assets fly. And this is what's happened after 2008. This is what happened during COVID as well. And it basically saved the economy going into a recession twice. But it's at the detriment of increasing risk on assets, because risk on assets going up and like housing going up means that the normal person gets fucked. But we're not here for that. We're here to make money with Bitcoin. So it is a good thing if it happens, if you're exposed to risk on assets like Bitcoin. Okay? Put very simply. And this is Trump versus Powell. He desperately doesn't want QE because he knows that QE fucks the normal person. But everyone that's rich wants QE because we want the Ponzi to continue, right? We want more money in the liquidity, more liquidity in the market so that all of our assets go up. But if you're asset poor, it's going to just increase the distance between the rich and the poor. And that's what we've seen since they started like properly quantitative easing, which is basically printing money, by the way. Okay, yield spikes, your macro compass. So yield spikes are really good because when yield spikes nuke, it indicates that people are worried about the economy, and it normally precedes the Federal Reserve doing something, so i.e. printing money and quantitative easing, okay? So it's really important for us to look at. Now, what we can, so this is a really good chart. We can see 2008, and so we got the dates here, and the yield. Yields nuked, then we had quantitative easing in 2008. Yields nuked, and then in COVID, we had quantitative easing as well. Now, yields have been going up consistently, but if we see another big nuke, that precedes, normally, quantitative easing. So if we see this again, I think the Fed are going to enact quantitative easing. So like I've written here, when you see yields fall strongly, this may indicate that QE and rate cuts are coming. When you see yields spiking, this indicates that investors believe inflation pressures could be coming, so they panic and flee to safe, scarce assets like gold and increasingly Bitcoin. So the funny thing is, it's good either way. Like Bitcoin's in a sweet spot where it benefits from either way. If people are worried about inflation, then people are going to gravitate to Bitcoin because it's more and more becoming a safe haven. If the market goes to shit, we get QE and the liquidity enters risk on assets, then Bitcoin is still considered like a kind of risk on assets, so it's still going to do very well. So both scenarios are good for Bitcoin. So basically, I don't really see a bearish scenario for Bitcoin right now, unless we get like China invades Taiwan, or like some crazy escalation with Iran, which I don't really think is very likely. Or unless Jerome Powell is very stubborn and he doesn't want to do any policy changes and we go into a big recession, which I don't think is likely either because it's not in anyone's interest. I'm very, very bullish on Bitcoin right now based on these things in crypto, okay? So like I said, Bitcoin just broke 88K critical resistance, and it renews and it signals institutional interest. People are buying Bitcoin. They see it as digital gold, and this is proof to me. And I really think that we're going to go back up to probably around 100K after this. So everything's looking really good, guys. Really, really, really good. The dollar's getting weaker. Look at this. It's just broken support. Like I said, it was at support was like 100. I wish I could draw a line. I'm not sure I can. Here we go. Look at this. Boom. It just broke support here. Nasty. It looks very, very bad. And it's getting weaker. So you got to think, if you have all these big boys, big hedge funds, big pension funds, really rich individuals, they're holding a lot of dollars. They're like, fuck, like I'm losing a lot here. Like the dollar's gone down, I don't know how much this is, 10%? It's gone down 10%. I've lost 10% of my money. If I had 200 mil, I've just lost 20 mil in like real value, okay? So what do? Well, they think to themselves, fuck this, I'm just going to buy gold. Or I'm just going to buy Bitcoin. It's going to do better than holding the dollar. So that's the narrative, right? And it's kind of similar to what we had in COVID. And this is helping Bitcoin. So this is very, very good. So based on all of this, I mean, we've covered a lot. And there's a lot of bullish catalysts and like kind of things going around for Bitcoin right now. So like, in my opinion, what should you guys do? Well, if you're significantly underexposed, which I think is actually the minority of you, it's a wake-up call. We've just broken 88K. Big psychological resistance. We've just broken this. We've held there for one day. Like I showed you before, we held there for one day. So if we hold for one more day, which I think we will, which is going to be today, which is Wednesday, the 23rd of April, I really think you should increase your exposure to crypto significantly. Increase it. So target asymmetric bets like abstract. Obviously, I'm big on abstract. You don't have to buy abstract, by the way, guys. I just think it's a good bet personally. Buy some of the memes on abstract that you think are good, okay? That's what I would do. But if you have any other coins that you want to buy, go for it. Buy some great altcoins. But you have to be careful with altcoins because there's a lot of shit. If you guys want, you can send me a message or comment down below. I can always, I'm happy to answer questions if you want me to see the altcoins that you guys have. Bitcoin's good if you want to be safer. So I personally just bought some more Bitcoin yesterday and I increased my exposure to abstract meme coins. That's what I've done, okay? The breakout of 88K signals institutional and retail. Lots of spelling mistakes from me today. Institutional and retail confidence. It's not the time to be sat on the sidelines. If you're overexposed, you're fine. Like everything's good. Just make sure your portfolio has exposure to high asymmetry plays, right? Depending on how much you're holding, obviously. If you're holding, I think if you're holding Solana and Bitcoin, I think you're actually good. Sui, I think it's a good bet too. Hype should do well. Have some exposure to some like smaller asymmetric bets like abstract meme coins. I think that's a very good idea. And also, I think that if you're a trader, you definitely should get back in the trenches because right now there's going to be a lot of opportunity. The trenches has been dead for about 2 months. So I'm not sure about Solana trenches. I'm not really the biggest fan. But like other chains, I think are going to do very well for the next month or two. So get in there, make some cash if you're a trader. And that's pretty much it, guys. Very, very exciting. And I'm expecting much higher prices over the next few months. So it's going to be great.